What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. All right, everybody, welcome back to another live stream. Happy Friday to you. Thank you for being here with me on the big NFP day. Today is the jobs report. I am very, very interested to see what it brings us today. I've been talking about it all week. We've got to set the stage a little bit when it comes to just how important this jobs report is. So as we get started, if you could just do me a favor, hit the thumbs up button, send the stream to a friend, send it to your mom. Maybe, hi mom, maybe she's watching already. You know, thanks for being here. Help me out with the channel. Just hit the thumbs up button, all that good stuff. Okay, so non-farm payroll day. Why does it matter so much? What does it tell us about the economy? What does it do to the dollar? What does it do to your gold trade? This is the common question that I always get is like, hey, what's NFP going to do to gold? Because it seems like everybody trades gold. You know, I was looking at something interesting, just a side note on gold. Gold volatility has pretty much collapsed from where it was. Now, if you don't understand volatility, if you've never really understood the concept, in the options world, volatility is everything. Because if you want to make a time-based bet, like you want to buy a call or buy a put, there's a certain amount of time you give yourself within buying puts and calls. They expire at a certain point. So time matters a lot. So if the chart's moving a lot, it means something more to people who want to make bets than not, because if I'm going to make a bet that I think gold is going to go up and I can just hold it indefinitely using shares or, you know, maybe like a continuous futures contract or something, that's one thing. But if I'm going to make the bet that gold's going to go up in the next 3 days, for options traders, there's a time value to that. Now, what does that mean to you if you don't trade options? Well, all it's saying is that gold volatility, implied moves for gold, have been trending down since that craziness that we saw back in early 2026, right? January was a monster start to the year for gold. We saw volatility expand dramatically, right? So gold was absolutely moving. And so now it's kind of gone to sleep. Really gone to sleep in comparatively speaking terms. Granted, gold volatility has been, you know, overall still elevated. Given all the stuff going on in the Middle East, you might have expected gold volatility to be more volatile, but it's been really kind of a sleepy trade. I mean, take a look at how price is basically just narrowing when we take a look at gold. So do I have any price predictions? Someone asked, do I have a price prediction for what's going to happen with gold's NFP? So I think this is a good time to do this. I mean, I've missed like maybe a handful of NFP reports in the last 8 years on YouTube, or 7 years, right? 6 or 7 years, 6, 7, right? Since I've started streaming on YouTube, I have streamed since 2018. Almost every major non-farm payroll event. And every time I do my best to kind of give you an overlay of what we do during these streams. So I don't make a prediction as to where I think non-farm payroll is going to send price. Why not? Well, because nobody knows with certainty what the jobs report's going to be. And the smartest people in the room, right, the PhDs on Wall Street, the the economists with access to just a mountain of data to try and predict it, they have already come up with the prediction that we're looking at today. They're forecasting a 65,000 added jobs to the US economy, right? So I don't believe that I'm going to be able to significantly better call the probabilities of that than the economists over in Wall Street doing all this stuff. Now, I might have times where I think that this number is a little soft, that it could be stronger than that, or, but right now I don't have a huge conviction one way or the other. We're looking at a 65,000 expected jobs to be added to the US economy. The unemployment rate is expected to stay at 4.3%. So, what we can talk about instead of trying to predict what that number is going to be today, you're going to see it across social media. You always do. When these sorts of events are counting down with 9 minutes to go, you're going to see people saying buy gold or sell gold or buy Nasdaq, or dollar's going to go down. But these people are guessing. They don't know better than the smartest economists with all the computer power in the world where the jobs report's going to fall. Granted, it's a 50-50 bet. So some of these people will be like, well, I told you it went the right way. Well, it's a 50-50 bet in terms of where it's going to go. What I am interested in doing during these events is actually discussing how these sorts of beats or misses could start to impact bigger picture trends. I'm not going to try and compete with the high frequency trading algos all over, the hedge fund world. I can't beat that, right? They trade milliseconds. By the time I process the number in my brain, they've executed 5,000 trades. So I'm not going to be able to beat that. I'm not going to try and scalp the news. Instead, what I'm going to do is I'm going to actually apply a little bit of logic here to, okay, let's say the number comes in at 100K jobs today. That's going to be a solid report. And I would expect that that could start to shift expectations more favorably towards the dollar in the coming week. I think that can very often lead us into multi-day upward trends or downward trends. So let's say today that the non-farm employment number comes in really soft at 40,000, right? We're expecting 65. Let's say we get 40. What can we do in that circumstance? Well, what we can do is we can recognize, okay, that's going to probably change the dynamic a little bit for the dollar. That might be a more positive print for gold. If you're somebody who wants gold to go up, you want a soft jobs print today. Last time we had a very strong one versus expectations. And let me show you a little bit of data to just sort of understand what the trend has been for these non-farm payroll events. So if we take a look at the last one, we had a huge beat. The one before that was a huge miss. We actually have a magnitude chart for this. If I scroll down just a little bit, check this out. We have the magnitude chart. The last couple non-farm payroll events, we've had 113,000 beat and then 150K miss, 64K beat. So you can see there's sort of this all over pattern going on. So that's why I kind of lean towards, I have no solid idea of what I think that the jobs report is going to look like today, but I'm certainly curious as to what this will, what kinds of trends we could start to look at following today's report. If we get a strong print, again, we're expecting 65K. So if we get a 100K jobs added, it's going to start to look a lot better. It's going to look like we actually have a little bit of smoothening out and improvement in the labor market. That would be more dollar bullish. That would be gold bearish. That would be for stocks mixed. I mean, I think that a strong jobs report is reasonably still okay and good for stocks. Stocks are in just this never-ending melt up. Feels like they never will come down. Of course, I say that satirically or sarcastically because it will eventually pull back, but your guess is as good as mine as to when that takes place. I'm a buyer of dips if we did get them in the stock market. Let's say we make a move back down towards 70, 50. Let's say we have a really weak jobs print today. That could be the sort of catalyst that starts a little bit of a cool off. If people start getting worried about the state of the economy, if hiring really slows, that might be the story that could get you a little bit of a pullback in this never-ending uptrend that we're seeing in Nasdaq, S&P, etc. Again, if you're someone watching gold today, what you're looking at from a technical basis is a very sleepy chart that could come awake, right? You have this scenario where, okay, we've got some major resistance overhead. When we take a look at gold, if you're a bull, you probably want to see this thing get taken out decisively. So let's say today you get a solid pop. What would get us there? Weak jobs. You get weak jobs today, a softer than expected print. It's probably going to send the dollar lower, and that would be potentially some fuel to get this gold move actually started. Now, granted, if the jobs report comes in really strong, stability in the realm, remember, that's the expression we often say on this channel, stability in the realm would suggest dollar looks healthy, dollar looks strong, and we sell gold, right? That's the, or we see gold sell off. That's more the dynamic of that scenario. So again, I'm not making a prediction as to what jobs report is going to be. I personally think that's not a very intelligent thing to do unless you are a very, very good economist and better than the ones all across, you know, the best paid, most impressive track record economists on Wall Street. So I don't play that game. I'm not going to try and predict the jobs report. What I am going to do, though, is I'm going to look at what the data does. And just like we do, I mean, this is how this system works, right? So when I look at, you know, the asset scorecard, this is how we take into consideration the jobs report. So new information will populate here in the next hour or so once all this data comes in, and it will start to impact the scoring matrix that Edgefinder uses. Now, we're doing non-farm payroll today, but what Edgefinder does is it tracks all of them: CPI, growth metrics, PMIs, retail sales, consumer confidence. It helps us to build a report card as to what the macro fundamentals are actually telling us based on what the actual data is versus those forecasts put together by the economics community. So if jobs report data comes in solid today, that's going to remain bullish for things like stocks and dollar, stability in the realm. Whereas if it comes in very weak today, that's going to be positive for gold. Of course, if you trade gold, you can simply select it. Right now, our system is much more on the neutral territory. With gold, all things considered, we've got, you know, macro fundamentals. The jobs report data has been recently very strong. This is up for debate today, right? We're going to see what that jobs report brings us. So I'm very curious to see what it does to gold score within Edgefinder. So we'll keep an eye on this as we go into it. By the way, we've got a couple of minutes to go. If you want to try out the tool that I'm using here to screen all of this data and build biases around this stuff, we'll drop a link here in the live stream chat to where you can actually sign up for our free course on fundamental analysis that also comes with information on our trials if you're interested in setting one up with the Edgefinder. So take advantage of that. We'll drop that link here in the live stream chat so that you can get access to that. Okay, so there it is. Just got it right there. Edgefinder plus free course is in the chat right there. So we'll see how it falls this morning. I am still looking at Bitcoin longs if we can get pullbacks in that area. With just a minute to go, guys, we're going to see what we get in regards to the NFP print and how it impacts our charts. I am, again, looking at that 50% retracement on the 4-hour chart when looking at Bitcoin. I do think that Bitcoin's rally can continue, but we'll have to take a closer look based on this jobs report. So we've got some data that could heavily impact our scorecard for a lot of different assets within. Godspeed, my friend. Be careful with this. We got people every single non-farm payroll. They treat it like a roulette wheel. So be careful with it. If you want to be here a year from now, I would encourage you to reconsider making any sort of rash or gambling decisions on the non-farm payroll. If you don't care if you're here or not, you know, a year from now when it comes to trading, I'm not, you know, not on planet Earth, but, you know, trading the markets specifically, then I would say issue some caution. Got 30 seconds to go, guys. What I'm going to do here is I'm going to switch over to our all markets view. What this does here for you is it shows you everything on one screen. You've got S&P, Nasdaq, gold, silver, oil, dollar, Bitcoin, and the Dow all on the screen here for you. And let's see what we get. About 10 seconds to go here. These are all hourly charts, by the way. All right. So far, Bitcoin slightly higher, stocks slightly higher. Silver, gold, not moving very much right now. Let's have a look at the numbers, see what we got. And we got 115K. Wow. Okay, so that is a solid jobs print. That's back to back, guys. That's back to back wins for the jobs market. 2 months in a row, we have had much better than anticipated jobs report numbers. Guys, that's almost a double up. I mean, it's 15,000 off from a double up in terms of expectations, and they just revised the previous one higher. Okay, guys. So we've got actually some decently strong jobs report numbers. This is why the markets are hard, right? Like 3 months ago, everyone was talking about how the labor market was going to fall off a cliff, and now you've got 2 back-to-back beats. Like these are good numbers. Again, the very next line for most people is going to be, well, yeah, we can't trust them. I get it, but look, I kind of take jobs data as a general trend, because there's only in general, right? If everyone is getting laid off, we would see it constantly in the news. It doesn't seem like we're seeing as much of that recently, and we also are seeing some pretty substantial beats back to back. I mean, 2 months in a row where you have this is almost a 2x jobs beat. Last month was a 3x jobs beat, just about, in terms of what I'm talking about is forecast versus expectations. Let's drink some NFP coffee. Cheers to you, Balent. Thank you very much for the donation, my friend. Very much appreciated. Thanks so much. Yeah, so again, we also have unemployment rate coming in at 4.3%. That's in line with expectations. And you know what this does? It tells me I'm still a buyer of dips in the market. But what it also tells me is, like, if you're somebody who is looking at rate cuts, wanting rate cuts, this is just a tough. Rate cuts made a lot more sense about 3 months ago when you're looking at a situation in which the jobs market's falling apart, or it looked like we were starting to get negative prints. The bond market's going to look at this and it's going to say that Fed is not going to cut rates. They can't, right? Will be interesting drama, by the way. The White House throwing demands towards the new Kevin Warsh. I think Kevin Warsh is going to get tested. And you know who also has had this theory on the channel a couple times? My good friend Chris Pulver, who will bring in now here to the live stream, see what he has to say on this jobs morning report. Hey, Chris, how's it going, man?
What's happening? Happy Friday.
Happy Friday. Hey, so another good jobs print. Is Kevin Warsh going to get tested hardcore with this stuff? Because this is just straight up, like, how can you cut rates into this?
Well, I mean, nothing shows up as rate cuts or hikes on the Fed Watch tool. I don't know if we talked about this, but I found a little statistic that was 10 of 13 Fed chairs have been tested by at least a 10% correction in the markets within the first 50 to 70 days of being in office.
Okay,
that's kind of scary, man. That's a lot of Fed chairs getting tested by a decent amount, and 10% is the minimum drawdown. I mean, some of them face like 20+% drawdown. So,
Chris, for those who don't know, and also for my own, make sure I'm on the same page with you. What do you mean by, like, get tested? So, like, obviously, new Fed chair. Go ahead. Say that
I
again.
just said market drawdowns. Like, the market's pulled back within usually about 50 to 70 days of them starting office, like starting their role as Fed chair. The market somehow musters up the courage to give us a 10% drawdown.
Okay.
And we just had one, by the way. So I'm like, is the market like, well, that was the way of markets testing that we're going to have a new Fed chair? Like, who knows if it's, kind of explained that way after the fact. But I mean, look, Nick, if we look at the price action, I mean, here's a good thing. If we're going to come back and retest the lows from March, now that becomes a 15% correction. Right, it's 14% in order to take out those lows. So if we see a test, well, let's say Kevin Warsh gets tested. Okay, to what degree? Okay, we could pull back from recent all-time highs. We could pull back, 5%. There's a good test for the new Fed chair. At 5%, as you know, is going to feel like crap because everyone's so leveraged to the teeth in their accounts that it's like, oh, it's the worst. It's the worst correction we've ever. Okay, 5% is nothing. But if we pull back to where this first like ceasefire gap started. Now we're talking 8.9%, almost a 10% correction. It still really doesn't change the posture of the market being bullish, but a retest of that 200-day moving average would kind of suck if it happened that quickly.
Especially given that a lot of the enthusiasm and excitement and a lot of the gains have been in some of the very volatile aspects of the market. Like, of course, where I'm going with this, semiconductors, right? We've had this monster move, this remarkable move in semiconductors. And so yeah, what would be a 5% pullback in the S&P 500 could very quickly be 20% or 15%, let's call it maybe, in the semiconductor world. So much uglier on that side.
Yeah, I'm actually going to look at a trade today on SMH. I might look at SOXX or SMH. I'm hoping that this type of surge to the upside. Now, I don't know how long I want to go out on this thing, but if we go up really aggressively, if we go up this aggressively, I'd like to see if I can have something that offers up. Maybe I might do like a put ratio back spread where I can make some credit if price pulls back. I can cover a little bit of a dead zone here, but if we keep ripping higher, that we have like unlimited profit potential. Because that's the one thing I'm wondering is like, how hot do these things run? Because it seems like every day it's like there's a deal from NVIDIA with Corning, there's a deal with NVIDIA with this company and this company. It's like there's just the circular financing and all the deals, and now it's, as we've talked about before, it's more so like the market's loving the physical AI side. I think I shared that that sector performance with you, didn't I? Did I share that screenshot?
Yes, you did.
65% of 65% gains year to date on semiconductors within like it's like 20 companies, and then the others energy and utilities. I mean, collectively that's 65% gains in semiconductors, 32% gains in energy, and everything else is okay. It's normal, right? And some sectors are mixed and some sectors are red, but just the two hottest sectors. I mean, I don't think that we necessarily stop that momentum. I mean, Nick, do you think that at the halfway point of the year, it's like, well, we had such great gains in semiconductors, get out of them, don't show them any more love for the rest of the year, and they're just going to fade this entire move? I mean, I don't know. I don't think they will. I think that this is just clearly showing the demand is there.
If there's one thing this market in the last few years has really, really glommed onto and loved, Chris, it's got to be momentum. So
Yeah.
as frustrating as it can be, especially in my case, like I'm not long the SMH. I wish I was, right? Like full transparency, would love to have caught this and have definitely kicked myself for being like, dang, man, I should have bought some SMH. But you can always kind of play that game in your head. But truthfully, semiconductors, they are the chosen one right now. And then that will change at some point. But if you're a student of momentum, what that would say is that this is probably going to keep going. Now, just because it's going up every day right now, you know, to me, that doesn't mean like, okay, buy it right now then. To me, it's still like the risk reward profile is very skewed negatively here. Like you have such good news coming out every day, like you pointed out, that one little thing, one DeepSeek type thing, or something out of China, or something from Claude, or something like you're so wound up here that could snap back very violently, very quickly. It doesn't mean I'm bearish on these things. In fact, I would like to own some more of it. I'm just saying, I think from a trader's perspective, that risk reward gets not so sweet up here. And that, yes, I think momentum probably continues. Like this is the chosen one. This is the winner right now. That could change. Momentum could go to energy next year or the next 6 months. Like that could change. I'm willing to be open-minded to that changing. That's why, you know, when I trade momentum, I've got a stop loss on it, right? I have to admit when momentum is no longer momentuming, if you will. But yeah, I mean, I think pullbacks would be attractive, but it's hard for me, Chris, right now to see this market. Like we saw the rotation, it lasted for like all but 30 seconds, right? Like you saw the broadening, and then now it's just Mag 7 back into semiconductors in the last 5 years or 4 years. That's frustratingly been the play.
Yeah, I'm just thinking of a trade on SMH. So the back spread stuff looks like the dead zone's way too wide. You know, an inverse iron condor might be pretty good on the option side where you can do a trade similar to this. I can build this one out. I'll see how wide the dead zone is, but I'm just curious on if price can get up to a certain level, either direction or fall. You know, this is where your risk is at. This is where I make money. To the upside. So if we go down on the price or up on the price, I would say if I can keep that dead zone within about 20 to 40 points, so that way any pullback in here or any upside blast, you know, it can just become a nice defined risk trade.
Sure.
Typically the reward to risk in this trade is a little bit unfavorable. So I'm trying to look at ways to participate. I think that we're probably due for at least a pause. Stocks, you know, charts that look like this, Nick, typically don't stay like that. They usually have some type of pullback. I just wonder if this market is, find a moving average, find a fib number, and just start going back up to these highs. So there might be a chance to grab a dip here. I don't want to call the top. I think that's silly. I mean, obviously, for the market to keep making all-time highs at this point, you want to see semiconductors do very, very well. So if you're cheering on a bull market for 2026, you want semiconductors to go up. You want the Mag 7s to go up. What was interesting yesterday is Mags actually gapped higher, finished relatively flat, while the market gave some back, and a lot of that was on like the semiconductor space. So they're big enough now with the pushes. We have like 14% of the S&P is now semiconductor market cap.
Wow,
it's huge, man. Like they I mean, when you got a stock that goes up 100+%, they start to show up, and the market cap gets a lot bigger. So, big stuff.
Well, and the software world has also started to do a little bit better here recently too.
Yeah,
you've got IGV breaking out to multi-month highs here. Of course, that's also fueling a little bit of strength in the NAS. That broadening. I mean, to me, it still does make sense that, like, if I'm buying one over the other right now, I'm still buying software personally. I think the cheaper valuations. I still think that they have a seat at the table in AI. I think that the market is kind of off on that. Personally, it's just my take on it. But we'll see longer term how that all plays out. Chris, precious metals, crude. What are your thoughts on the commodities world? Any interest? Copper, natural gas, oil? You watching any of these things?
Of course. So I'm still on the same analysis from last week on gold, which is I'm going to be patient. There's no real time horizon here, but if we make a low, I mean, we could be carving out a low already, but I think if we have a channel and to really, shake out the speculation on gold, if we have one more push down to the 200-day moving average, I look at that as an opportunity to, this is more of the anticipation accumulation zone, meaning I would buy, kind of close my eyes and buy, and just say, look, this is a long-term investment on gold. But if I wanted to trade it and I wanted to time it better, if we came back down to the 200-day moving average and we get below it, as soon as we get back above it, you position for the longs. Just let the correction play out. So, gold's an interesting read because at one point it's the inflation hedge, at one point it's the debasement trade, at one point it's government's printing money, at one point it's like everyone kind of gives gold the identity of what they want it to be. The reality is it's just an asset. Everybody likes it, and it's been in portfolios for forever. I mean, literally, it's like one of the oldest things in portfolio history. It's had a great run. I think it's nice that it's cooled off a little bit. I think the mania has settled, and so people have looked elsewhere, and that manic crowd is chasing oil. Now they're chasing semiconductors. Now they'll chase something else too. Who knows? But I like it. What I have going is trades out to 2027, 2028. I've got option trades in. I've got GLD shares. I'm looking at. I trade a lot more gold futures. If we're down below the 200-day moving average, I'll start looking for bull trades only on gold and looking for some swing trades, maybe on futures. So it's going to be just a steady game. But I'm not really getting into the trenches right now to say I'm going to trade gold, because I don't think it's going to go anywhere. I think my analysis on gold is we could still make a low below the 200-day moving average. If it goes back up with this type of structure, it's like, well, we could go this way, hit the backside of this trend line, and still have a correction.
Interesting.
But I'm not bearish.
Sure.
Yeah.
I think an interesting move here that's happening today in that side of things is you actually have yields not really moving much off of what was a pretty solid jobs report this morning. And again, you can see yields are pretty much unchanged, sitting around 4.374. At the same time, the dollar is actually still sitting pretty down in the mud here today, which is interesting. I would have expected a little bit more of a pop on the dollar. So we'll have to keep an eye on that. It is still sitting at this support level we've watched for the last few weeks, this 98 level on DXY. Let's see how price reacts here today. But again, solid jobs print, and dollar kind of shrugging it off anyways. So I don't have a very solid opinion right now in the short run on the dollar. I'm a little bit neutral, but I am pretty interested to not see the dollar making a little bit more of a bounce off of such a solid report here this morning. Also at the same time, gold, in regards to this one, I'm also pretty neutral, just waiting. I did have a GDX trade that closed out. So I shorted puts on GDX and held it for GDX. I sold puts on this like a month and some change ago, and basically it has gone kind of nowhere and then bumped up here, and I was able to get out of there for around 50+% of max profit. So just going to kind of reset, and maybe, you know, GDX gold itself will continue to roll over, and in that case maybe I can get some longer term holdings going on that side of things. But to your point, Chris, you're seeing that mania fall apart. And I just want to point this out for reference. We do this every time we see these sorts of moves. Like right now, that's happening in semiconductors. Back here in gold, Chris and I, every day we're watching this thing and being like, dang, I really wish, you know, we had loaded up even more than we did. Or you know, it's easy to, even for people like Chris and I who've been doing this for a really long time, when you get those mania type moves, yeah, it's like FOMO is a real feeling for everyone involved. But you can kind of see that when those things come to an end, when the music stops, the party, you know, can end abruptly. So please be careful out there with things like semiconductors. I'm not saying I think that's going to happen to semis.
Yeah, but that could be very similar price action, Nick. Like that's the one thing I want traders to recognize for 2026 in semiconductors is gold looked like that. Yes. And look at how gold corrected. Semiconductors look like that. So I mean, to look at a chart of SMH, look, it could still be bullish, and we could have a pullback on semiconductors that come all the way back down here, or even all the way back down to these moving averages. And it's like, what a crazy run from March to end of April, and obviously into early May. But it's like, man, I just think like just keep an eye on it. You know, I just know that if we go higher, at some point this gets a little bit nastier. But I think here's the good buy. If we just go from low to high, we find a, I guess I could drag this a little bit higher. I thought I'm stupid. I put a top right there. Just keep going up. So there's a fib. If we go to, let's say, a 382 to 618 zone, that's where I'm going to start taking a bite. You know, I'll put in like a defined risk option trade. You know, I'm wrong right here, and then I'm right if we go back to retest the high. If we go higher than that, let that thing run. Yeah. So that's a good defined risk trade. I want to see the markets at least cooperate in some way, shape, or form to give us a pullback. There's enough volatility on something like this to do it. It also might mean the same thing in the stock market, Nick. We might have semiconductors that pull back double digits, and the S&P might be down 3 to 5%. It's big enough to maybe take notice. So that would be, I wouldn't be shocked to see like a 15 to 20% correction in semiconductors. That could be like a 3 to 5% correction. The index is all by itself. But the combination, here's the one thing I would be concerned with. If we have Mag 7 down and we have semiconductor down, I think we might, you know, maybe see that like 7 to 10% correction that, you know, could be masses. The market's testing the Fed share. Well, if semiconductors and Mag 7's down, the market's going to go down with it. I don't think we care about Kevin Warsh, but the market's going to find a way to maybe correct a little bit. We'll see. Yeah,
and I think you're spot on with that. I think Mag 7 and SMH, I mean, they are pretty connected, let's be honest, right? Yep. Like if we actually group that all together, semiconductors, who are their biggest customers? The Mag 7.
For sure.
And Mag 7, where is their biggest bet going on right now? The semiconductors. Yep. Like they're all tied together. So it feels like when these sorts of things happen, and maybe this is where a little bit of experience comes into play. We've done this for a long time. You're just taking a step back rationally. When you get these kinds of moves on the Nasdaq, when you get these kinds of moves on the S&P 500, I am absolutely not a fan of shorting them. I'm absolutely not a fan of trying to bet against them. But you watch this play out, and what I know the feeling that goes on in your head right now, if you're watching these things, and you're like, they just never pull back. They just go up every day. Yes, until they don't. And someday, suddenly, violently, everything changes. And you're like, what the heck? These things can go down. So you look at something like semiconductors, you look at something like gold back in 2026, and you look at these and you say, these things are undefeatable. They never go down. Gold goes up every single day. And that mentality, that trading psychology, if you're feeling that or thinking that, you're not crazy. That is literally trading psychology. That is like human natural response. If you're looking at this chart, it feels very natural to be like, it literally never goes down. It only goes up. You're just looking at recency bias, and you're saying it doesn't go down until one day it violently does so. And unfortunately, as always, the story goes that people start to leverage aggressively as the thing keeps going up because they feel invincible. They feel like it
Right.
never stops going down or going up. And
Right.
so same thing with semis. That's just, Chris, I always feel like that's the right thing to do on our side. We're not telling anybody what to do with their account, but just experience says, please be careful. A lot of people lose a lot of money when these things change directions.
Yeah. Let's talk copper and oil for a second.
Yeah.
Copper, I mean, there are ways to trade it. I mean, I think the simple trade for me is FCX. That's a stock. This one's done pretty well. I've been long since like $30, and we're seeing a bit of a range. If you go copper futures, tougher one to trade, a little bit more expensive. But man, this is breaking some. This is what makes me a little bit nervous. We go back to like 2006 highs here in 2011. We're at these same levels now. Either copper is going to go parafrickambolic, or I guess we can have a steady breakout, and maybe this needs to just change into a trend. That's fine. But I would think that this resistance maybe matters. It's still well supported here, but taking a look at the nearer term, I could see copper ranging a little bit. We had a decent correction in here, maybe a range bound trade in copper. But long, I feel like if we pull back to like 550 or so, defined risk wise, copper still looks good to the upside. If we get another, I mean, Nick, would you be surprised this year if like this is the year that just like blow off tops, parabolic everything, parabolic copper, parabolic semis, parabolic? I mean, the blow off top could be. I mean, we could have the same type of weird FOMO of like, I can't believe this, like gold is this high, but we could be saying that about semiconductors and I mean, it could be the indexes, but I would say like copper, semiconductors, that just seems to be the hottest sector. And I part of me is like, don't do it, man. Like, don't get crazy long. I think I took the screenshot here. I think this is from Goldman Sachs. Let me find the picture. It just says, things are a bit more expensive in 2026. Here it is. Valuations. This is the current percentile ranking relative to history. Forward PE is considered expensive. I mean, okay. Trailing PE is considered very expensive. Normalized PE, very expensive. Price to book ratio, price cash flow, dividend yields, all very expensive. Shiller's Cape, like it's 40 plus. This is like
most expensive in history, or
exactly.
almost
very expensive, if not highest in history.
Highs. Yeah.
Yep. You've got equity risk premium for the 10-year treasury yield. You got the Fed model, market cap to GDP, which is essentially that's your Buffett indicator. Market cap to GDP is your Buffett indicator. That's like 200+ overextended, 2 standard deviations above where, and I don't know if you saw this from it's Greg, somebody is like the new CEO or the new kind of the Berkshire, the new Oracle of Omaha, if you will, for Berkshire. But they're sitting on almost $400 billion in cash. So they've been a net seller for almost 2 years now. They're just going to continue to grow that stockpile with a risk-free rate. So again, I mean, Berkshire is falling behind as far as this run. If you go to Berkshire B on the daily time frame, the market's not loving the fact that Berkshire's like, hey, why are you not participating in AI? And they're treating it pretty poorly. So the S&P's at all-time highs, the Nasdaq's all-time highs. The Dow is not quite there, but Berkshire's not getting much love for the market. I do wonder if this becomes a great defense trade if the market does turn at some point in time.
I was going to ask you that.
Hey, which company has the power to buy everything under the sun at a crazy discount? Berkshire Hathaway does.
Well, and they have all the resources in the world, right? They have all the, they've got all the networks, all the connections within that world to make acquisitions if they want to, or they do, right? They're a giant supplier to insurance companies. They have all the connections involved. If you're sitting on cash and you do get some sort of market, fall apart, suddenly they're going to look heroic with all that cash. But in the meantime, they're getting bullied as always. I mean, this is a story, Chris, I feel like is as old as Buffett is, right? Whenever the market is ripping without him, people say he's lost his touch, that his strategy is out of date. And granted, things like, for example, the Buffett indicator, he himself has called that sort of outdated, given that the U.S. market cap has really shifted from more of a domestic type stock market to more of an international. So the GDP of the U.S. It's really the stock market. Maybe the updated one would be U.S. market versus global GDP.
Yeah, that's fair.
That would be an interesting one to see.
Yeah, if we did U.S. market cap versus like global GDP, I feel like that might be a better
maybe
percentage.
That's a good edge finder tool to build. I could look into that.
Let's see if that's overbought, Nick.
Yeah, right. Exactly. Well, it probably is probably still at all-time highs, right? The U.S.
most likely.
Yeah.
So, but as a percentage, though, it may not be 200% overvalued.
Correct. Like almost certainly not, right? Because of course you got the rest of the global GDP, which is what, like 60% remaining or something like that. So
still a lot left out there.
Definitely an interesting one. Chris, I've got another thing I'm watching. It's Bitcoin. I actually think that Bitcoin might actually be starting to turn here to the upside. Now, I'm a little bit more, I like to see charts moving up here before I start to take defined risk longs or stabs at it. I think that if Bitcoin, if the market's going to keep rallying, if things are going to broaden again, if you're going to get a more positive story, I think Bitcoin could see some nice risk reward sort of setups. I mean, this is to your point. If you are going to get like the everything rally, where would that really potentially, run to? Well, Bitcoin is one of those sleepy, hasn't done much types of charts. So I'm watching Bitcoin on a pullback, maybe this 50% retracement level here on the 4-hour chart. I'd probably put a stop below this one because I'm not necessarily, married to the idea of sitting in Bitcoin longs because it has been a tough trade for a little while, but it is recovering here nicely from the lows. I mean, you have to remember, this doesn't look like all that much on the daily, but that's a 37% rally. And if Bitcoin were to sort of join in on what you're talking about, maybe seeing some sort of global, rise in prices on everything type of move, that gives Bitcoin quite a bit of upside, given that we're not even at those all-time highs. Meanwhile, that's 59% away, while the Nasdaq and S&P 500 are well above prior all-time highs. So if the risk on rally continues, my personal opinion would be a Bitcoin long would probably be more attractive, in my personal opinion, than chasing the Nas at these levels. That's kind of contrarian because it feels like Nasdaq goes up every day.
That 4-hour chart you just showed was insane, by the way. Just like that daily chart. It's like, dude, I mean, the amount of bullish candles to bearish candles on that streak from the bottom in March to now, it's wild what we just witnessed. I mean, that was an historic bullish rally.
Yes.
That's never been seen. It was the fastest recovery. It took 11 days to recover from a 10% drawdown. It's never happened that quickly before. Yeah. It's been. Anyway, back to your Bitcoin point. I do like Bitcoin. We're coming up into some pretty reasonable resistance on the technicals with the moving averages. If we get above 85, I would say focus on, we're above the 200-day moving average. You've got some room to run. I do have a caution zone around that 95 to 100K though. So what I'd like to see for more of me, to be convinced it's more of a bullish structure, would be if Bitcoin comes up to probably like a 105 or 110. That area clearing this resistance would tell me that a higher low to a higher high is more of a trade, versus my concern is we come right up to it, kiss the same area, and we fall and we come right back down to the same lows or lower. Now, I'm a buyer at fresh lows. I just don't know if we're going to get there, and if the risk appetite is still there. What is frustrating is watching the markets V-bottom the way that they did, and Bitcoin's like, we'll just slowly work our way up. And granted, it's up 30+%. MicroStrategy's up 70%. Yeah, but it just doesn't look like it's participating nearly as aggressively as the S&P and the Nasdaq have.
Another point to make in terms of key levels to watch if you're watching Bitcoin on the daily chart. You're coming up to the 200-day moving average as well. This is just a simple moving average. I know you've got your EMAs as well. So we're coming right up into that area. You do also have some pretty big resistance around the 85,000 mark. So it's a bit of an aggressive long if I were to kind of try and anticipate the push through that 200-day moving average. But I do like the recent momentum. I'd probably put a tight stop on it. But yes, I also agree. I actually like better than that. If it were to follow through and actually get going here, back above 100, it's a huge psychological level. If you were to see that kind of move, any sort of weakness in there, I'm looking for probably long side continuations. I like that. Yeah. So we'll see if, again, 200-day moving average, Crypto's been a painful story for a while, so I guess we can't get our hopes up too much with this, because every time it's gotten a little something going, it feels like it gets smacked back down.
Yeah,
So
but you want everybody to hate it. When
yes,
people
that's
hate it,
true.
it's a good trade.
It's more primed for that, explosive chase back
Yeah,
in.
because then we'll be back at highs when people chase it again, and we drive that price action even more aggressively. So we want it to be hated right now, which is fine.
Right. Yep.
Yep.
I'm definitely there with you. And I think, in terms of other spots, I mentioned earlier, very neutral on the dollar. If I take a look at the VIX, I think the VIX is a little bit low for where it's trading. It's trading at a 17. I still think that if you're looking at oil, Chris, I'm not long. I tried to take a stab on the long side, got stopped out on it. I thought we were making maybe that anticipatory move back towards those highs. Things seem to be heating up again. Didn't work out. Stopped out on that idea. And I'm kind of just back to neutral on oil, watching it. Big spot to watch on oil, though, is notice how yesterday and the day before, price really rejected again right around that $90 mark. Despite all of the promises of the war is ending, everything is going smoothly, you have infrastructure damaged in the region, and meanwhile you also have a pretty persistent bid on price every time we pop down into that area.
Yeah.
Iran still seems to be kind of pushing back on the narrative that the war is over and all things are good, and that the Strait of Hormuz is going to open up. So as oil falls, I think again inevitably there's a little bit of a positive risk reward formation, in the sense, like, if you get that, once again, that weekend headline that spooks the market, I think the risk reward gets a little sweeter as you come down into that 90 area.
I agree. Take your stabs, but like you're doing tight risk. If you're wrong, you're wrong quickly. If you're right, let it run. We've got runs from like 90 back to 110. And it might get smaller and smaller. We might be getting like this big pinched wedge or something that's forming on oil ultimately after having the big run up from 120 essentially down to like 75. So it might just get narrower and narrower. But ultimately oil's gonna have to make up its mind to do something. It's just been a lot of the volatility has been kind of shaken out of it. But yeah, there's always going to be something headline wise. The reality for me though is the market's looking past it. I mean, again, if the market wasn't looking past it, we wouldn't be at all-time highs. The market doesn't do stuff like this where it's like, still concerned about Iran when we're sitting at all-time highs, still cranking when semis are up, 100% for every freaking semiconductor stock. And, we're just trying to push all-time highs. I think we have 14 all-time highs for the year. I think we just poked another one today. So that's 15 all-time highs already for 2026. And a lot of it's come in the last couple of weeks.
Right. Yeah,
So.
no, it's been a pretty continuous. I mean, for me personally, I'm still sitting on a good bit of cash, more so than I wish I was, to be completely honest. But
Yeah.
Did not really get, when I look at NAS and S&P. I mean, you pointed out earlier that chart looks so incredible, so one directional. And there just really wasn't very many pullbacks within, this move. So,
dude, it's one of the wildest stretches I've seen for a long time. I mean, this is a daily chart. We've had just a couple of blips and pauses in red, but they were still closing. Mostly they were closing higher. I mean, other than this thing breaking, I think this thing had 13 days in a row, and it finally broke the streak right here where my mouse is. I was, I'm like, look, 12 and 13 days, I'm going to short. I just did some bear call spreads and got paid pretty well. But then once we broke the highs, I'm like, yep, that was it. Win streak's over, maybe a pullback, but it's like, yeah, we're overbought with some divergence. You know that indicator very well. In the near term, I could see the market cooling off a little bit, letting some pauses, maybe some pullbacks, maybe some dips. But there's just such good structure. Any constructive dip of 1 to 3%, market's probably going to love buying the dip. Anything at 3 to 5% might feel a little bit worse in the near term, but probably still a buy the dip. Yeah, I mean, I like having cash, dude. You talked about cash position. I am well over 50% cash right now, and kind of happy with that because I'm trading way more short-term stuff, defined risk stuff, just because all the trades I started taking earlier in the year. So if you're in my pulver alerts and stuff, a lot of the trades we're in, we are 40, 50, 60% out of the money on a lot of our trades and indexes and stocks. And that's for a good reason. I don't want to have any crazy risk going into whatever summer looks like, whatever the Fed, whatever maybe worst face is a test in the market, whatever midterms look like coming up later this year, whatever other drama comes out of Iran. It's I want to survive this year. I'm already off to a good start since we had that bottom in March. I'm up to fresh year-to-date highs. I want to keep that momentum going. I've got lots of premium that I've sold. I want to keep collecting on that time decay.
Yep.
So I'm trying to keep it safe right now and then go more short term on some of my positioning.
Yeah, no, I like that. And I think we're waiting on someone else to join, but Chris, you probably got to run, right?
I do have to run. I'm a little bit behind. So
yeah,
I appreciate
no
you
worries.
letting me come in, man. It's been a good,
yeah, thanks for
week.
coming on, man. And we'll catch up with you next time. Have a good weekend.
Sounds good, Nick. Thanks.
See ya.
Bye.
Okay. In the meantime, we're waiting to see if Tiger is on his way. Just checking to make sure. Didn't get any kind of message. Nothing yet. Okay. We'll stick around for a minute. Yeah. So I'm very much in the same camp of that Chris is in, which is I did take several long positions in stocks that I liked, but during this grind down in the market, I was adding to stocks that I own, but candidly, I would have loved had it kept going because I was still in the middle of doing that accumulation. That's pretty much what happened. And then I stopped buying stocks on the way up because I tend to like to buy stocks for the long term when the market itself is moving lower. I just, all those positions, I believe every single stock that I bought is in the green now. So we're looking good on that front. I also did a lot of cash secured put selling, which all of that also ended up being profitable, which was great. So we made some really good trades during this period of time. What has been a little bit more tricky for me recently has been the lack of any sort of pullback since then to reload, to take new trades, etc. And so, candidly, it is a bit frustrating. You're sitting on a lot of cash. You're like, okay, I want to be long. And I kind of agree with Chris. Like, I think if you see 1 to 3% pullbacks, like I think the market's going to buy those dips, which is also frustrating because I'm kind of looking for larger pullbacks than that to really build positions again. But the thing is, you never know when the game is going to change again. You never know when suddenly something is going to come out of nowhere, and you're going to really wish in those moments, if you just chase these sorts of moves, you're going to really wish that you had the patience to actually wait for corrective moves in the market. So that's my take. That's for me. It's like, what can I actually do up here? Not a whole lot. I just sit, I wait, and I pick my spots. Warren Buffett, we talked about earlier, he's sitting on the largest cash pile of his history, right? Well, he's not obviously running the ship anymore, but Berkshire Hathaway, right? His company is sitting on the largest cash pile they ever have. And so, is that them calling it the market's going to crash? No, they've reiterated that that's not what that is. It's that instead they simply don't see really great opportunities out there in the market right now. Everything is sort of expensive. And so if you do get a large scale move lower, people who are sitting on cash will feel very, very good, right? JOMO is what they call that. The joy of missing out when the market moves lower. But we'll see. Again, I'm no way trying to time that drop off. Let me just really quick, I'm just going to send a message. Tiger Berry, are you hopping in? Just to make sure we are good. We've got him scheduled for 9. I'm just not sure if he's maybe he slept in today. We'll see. I'll continue to buy Microsoft, Nick. I'll buy a bit more as it drops. The time for software to rise is approaching. Yeah, Bulent, I mean, I like Microsoft too. In general, with the software names, I think that there's some good picks out there for the longer term. I am still sitting in my Intuit shares. I did pretty well with this buy. I mean, I got pretty much the low. And it doesn't look like much, on this chart because the thing got absolutely crushed. But I think I'm up like 12% on that position. So I feel decently fine with the stocks that I did buy. I guess Uber is one stock that I'm still in the red on, even with the pop in earnings. But I've held on to this name for a while. Nick doing dollar cost average on Visa. Yeah, I still own Visa shares. I've done well with Visa shares. I'm just sitting in my position here with that one. but I have a lot of different names I want to add. So I probably will hold off on dollar cost averaging on it, Rabies, just because now, if it gets cheaper and I, the market's really moving lower, then I may actually start to add to that position. But right now, like, what you have to understand too, is that when the Nasdaq truly drops, everything will drop despite where it's at right now. So that's where I'm cautious. I don't like to buy stocks individually when the index is just screaming higher. Here's why. Sure, I look at a Visa and I say, I think this thing is a decently priced stock. But if the market itself has a 10, 15, 20% correction, you can bet with a pretty good probability, so too will roughly Visa as well, right? So if you have 15, 20% down, you have to understand, like, the stock market is very correlated. So when stocks at the highest level drop hard, the individual stocks that you're watching in your portfolio will almost certainly be very red too. So I look at the Nasdaq and I think, risk reward, not great. So even though I love Visa, even though I love Intuit, even though I love Uber, Microsoft, I love those names. It depends your timeline too. If you're looking like really long term, it's one thing. But if I'm looking at these things, I'm thinking, okay, Nasdaq, like if I see a 10% possible pullback, I'm just going to sit and chill, right? I'm going to chill. I want to buy more Visa, but 10% lower looks a lot more attractive on Visa. I'm not saying I think that's going to happen. I'm just saying that's what would actually get me to buy more shares, is drops in the stock. Because I am what is more referred to when it comes to stocks as a top-down stock picker. I look at macro first, and then I look at micro. So if you're looking at micro, that's going to be the stock's financials, looking at the company. We use Stockbox for that. For the macro, we use Edgefinder. So I use both for my, analysis on the market. And I use micro, Stockbox to analyze individual stocks. Now, sectors, I do like to trade and watch sectors, are going to kind of be in the middle of that. They're in between macro and micro. There's so much stuff you can do in markets. I like to trade it all, but there are times for me that I just have to sit on the sidelines, and that would be right now. Nick, what do you think about gold? Gold, very neutral, very boring to me right now. Let me just check my message. James is going to take over. Okay, cool. We're going to bring in our next show host. Just to give you a final thought on gold, we had someone ask about it. Gold, I'm very neutral. You had solid jobs report today. That's bearish gold, but you also have overall institutions are still very bullish on gold. We see that in the commitment of traders tools that we have. And we've had some weakness in the economic growth world. That's also bullish for gold. So I have a mixed view on it. I just don't have a strong enough conviction on the macro side. And when we look at the price action side, I think you probably need to see like a decisive push through some of these major levels to really make a decisive bullish or bearish trend directional call. Because right now you're kind of topped out, like you're kind of sitting in a range. So I like gold for the long term to the upside. Preferably if it were to come down to like the 200-day moving average. But in the short run, I just have to stay neutral. I can't force any sort of idea. So we'll see. Nick, adding the price forecast to Stockbox was an excellent decision. Yeah, I love that stuff. And we're going to probably add more of those. So stay tuned. We got a lot of stuff coming to Stockbox. Anyways, up next, guys, we have James Lane taking over from Forex, or Forex James from Elite Traders. Check him out here. We'll drop here in the chat a little bit of a guide that he's put together. I highly encourage you guys, if you're interested in exploring Edgefinder and how to actually apply it to your trading, he is the man. He's explained it in a way that a lot of people really resonate with. So with that said, up next, you've got James taking over the stream. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey, ladies and gentlemen, happy Friday. I hope you're all well. Let me just, there we go. Cool, good stuff. Hope everyone is good. Hope you've all had profitable weeks so far. So what do we have? Not too much, to be honest. We did have some US news. We had the labor data come out, so NFP, unemployment average hourly earnings. So we can take a very quick look. I'm sure Nick went through it with you as well. So we won't spend too much time covering that. Let's just see if the Edge Finder is updated. What day is it today? The 8th. So the Edge Finder hasn't quite updated yet. That's fine. So let's just double check. Bear with me for 1 second here. Just checking my calendar to see what the data actually came out as. So NFP came out above forecast at 115K. We had unemployment rate stay the same at 4.3. So that was the actual and forecast. And unemployment rate, sorry, that was Canada, looking at the wrong thing here. Average hourly earnings came out at 0.2. Forecast was 0.3. So average hourly earnings year on year and month on month both underperformed. So a little bit of mixed data. Overall, I wouldn't say it's necessarily great. I also wouldn't say it's necessarily bad. Pretty stable. So it is what it is. Look smart today, James. Thank you very much. I thought we'd end the week dressed appropriately to say we're in the financial markets. Not like a finance bro. Carlos, good to see you. So there's not much on my watch list really at all, actually. So I'm still in Aussie Swiss. I saw someone mention this earlier. I can't remember what the message said, and I can't remember who it was from. But yeah, Aussie Swiss still runs. It's really looking quite bleak, to be honest. I think the Australian dollar, as we've been talking about over the past couple of days, or the past couple of weeks, actually, it's just a very crowded currency right now, COT-wise, and even retail very crowded to the opposite side. So they're short Australian dollar. So at some point, we're going to get some sort of quite strong reversal, I would suspect. Whether, I always say this, but I don't know when that will happen. It would likely take a catalyst like the RBA pivoting more neutral, possibly even dovish, and other developed market central banks then also pivoting more hawkish. So definitely something to keep an eye on. My SSLN position really isn't doing too much. So SSLN is basically just physical silver. We've discussed this previously. I won't go into it, but it's more of an investment rather than a swing trade or a day trade. So, do your own due diligence. This is more just me expressing my long-term bias on silver. I think we can very easily get to 100, 150, possibly even $200 on silver at some point. Not anytime soon. It's more of an investment over the next 1, 2, 3 years if necessary. But yeah. Isn't AUD CHF longs expensive to maintain? No, it's exactly the opposite, Israel. So Aussie Swiss, if you go over to the Edge Finder, if you have access, you should have access to the Edge Finder. It's 2026. If you don't, what are you doing? Use code ELITE for a discount. Go into Carry Trade Scanner. It's, that was the wrong button. It's number one. So the reason, because we look at the base in the quote, basically the interest rates of the central bank. So the base currency, so the Australian dollar or the RBA, have an interest rate of 4.35. The S&B or the Swiss has an interest rate of 0. So the interest rate divergence, we don't really have, well, I suppose it is a divergence, but because S&B is 0, we're just getting the flat interest rate from the RBA. So it's a fantastic buy position. And this is something I was explaining yesterday. Basically, I don't really care what this trade does, which is why I've not closed it, because I'm happy to sit really as long as it takes. Obviously, if it hits stop loss, that's different. I'm stopped out of the trade. But if it's just sideways, I'm still getting paid. So it doesn't matter, regardless of whether it's in drawdown and range bound or whether it's in profit and range bound. I'm building up at least a little bit of a buffer. So let's say hypothetically, this trade just range bounds and then for some reason just collapses to stop loss. Fine, obviously I'll still take a loss, but the loss I do take has been massively minimized because I've earned money from those swaps. So this is how you can use swaps as a fantastic tool in trading. They can act as a buffer. They can reduce your take profits because obviously they are essentially profit on the trade. So really, really interesting things, actually. If you don't know about swaps, you should absolutely look into them. And again, carry trade scanner on the edge finder makes it so simple. Why is UJ still bearish when other yen pairs are bullish? Let's see. Actually, I've not really been on the charts today, so let's see what the edge finder is saying. I'm not seeing anything that you just said, Paul. So Swiss yen's bearish, pound yen's bearish, CAD yen's bearish, but then I'm also not seeing dollar yen bearish either. So I'm not sure if you're talking about the edge finder or just the charts. But yeah, I'm not seeing what you're saying there. So New Zealand, yeah, I'm guessing just by looking at this, you're very likely just talking about the charts themselves and the candlesticks. So dollar yen specifically is getting pressured, not just from the yen being relatively strong, but also from the fact that the dollar is losing its war premium. So we're getting yields coming down. Look, 10-year. Oh, it's because I'm on the H4. I was going to say these yields are looking horrible. Hold on. Let me just change that back to the daily. So yields are coming down on the long end, or long end yields are coming down is the right way to say that. So 10 years are coming down. 2 years, not quite so much coming down, but they have had a little move to the downside. Obviously, as we've had de-escalations in the Middle East, the dollar is also pressured on the back of that. So the dollar itself is going to be relatively weaker than its counterparties or the other major currencies, I should say. Hopefully that made sense. I know that was probably a bit too much information summarized for you, but hopefully you get what I'm trying to say. Sorry, I mixed up the base and quote. No, it's okay. It's all right. It's easily done. Easily done. But yeah, Australian dollar Swift, it's the best, factually, data-wise, the best currency to be a buyer of right now. Oh, sorry, best currency pair to be a buyer of. Yeah, it's a beautiful one. Anyway, let's continue. So Australian dollar Swiss, as we said, positive swaps, and it's still very bullish on the edge finder. So there's no reason for me to get out of the trade. The trend is still there. The swaps are there. The fundamentals are there. The rate advantage is there as well. So it's fantastic. Australian dollar US dollar is interesting. I really like this idea. And we were looking at it yesterday. And typically, actually, we did get the entry I was looking at, but I didn't manage to get in, sadly. So what we have, Australian dollar, US dollar, very bullish with a score of 9. So trend bullish. What have we got here? So fib from the low to the high. We pulled back into the 50% retracement right here. Also retested our 50 H4 moving average. Slightly retested previous structure. It's a little bit choppy, a little bit messy. So it's not the best, but we could classify it in this case as testing previous highs. So it's almost break, retest, continuation type pattern. So I really do like the Australian dollar, US dollar. I'm just thinking about how we could get in now. And I don't think there is an opportunity at the minute. I think the problem I've got at this moment is I've missed the initial entry, which would have been here or maybe down here. It depends. One of these 2 points, either the top of this H4 candle or the top of this one, either one. That would have been the only entry I could really get in, just according to the way I traded my strategy. So now we've already had the lift off from here. I can't do anything because we've also not printed a higher high yet. So I can't draw a new fib. So yeah, I'm kind of stuck in this market really until it does another decisive move or an impulsive move. Again, whatever you want to call it. But yeah, I'd need to see another move to the upside really before I could start looking for a new position. What do I think about gold? It's a good question. I would suspect gold is heading to the upside at the minute. Let's just double check. Kind of, not really doing anything actually, but I think we are heading back into a bullish environment for gold now. So obviously we had a lot of factors bearish for gold. We had the US dollar up, we had yields up, we had inflation expectations up, central banks pivoting more towards holding, possibly hawkish. So it wasn't in a situation where gold could really perform in any way because there was, you've got to really think of it as opportunity cost. If you're an investor, let's say you've got, let's say tens of millions, even billions of dollars, and you need to deploy it into the markets. You need to get that capital working for your clients or whoever it is, maybe even just yourself. You've got to think about where is that money going to make you the most money? When you've got yields up, central banks going on hold, you've got the RBA hiking, inflation expectations up, gold isn't the place you want to put your money. So that was the dynamic that we had for gold for quite some time. That's obviously why we've seen such a large downside. But now that situation's coming to an end, or what seems like it's coming to an end, with yields coming back down, dollar weakness, we're heading back into a regime that could be quite positive. So in that case, I would need to see these moving averages cross. That would purely just be a way for the market to tell me the trend is now bullish, the trade is valid to be a buyer. At the moment, this is still technically a bearish trend, so I can't really justify being a seller. So if we could get another move to the upside, moving averages cross, and get the edge finder to read bullish on gold, that would be fantastic. But at the moment, again, because it's in a bearish trend and we are somewhat consolidating here, I don't really see anything right now, but I would lean more bullish. What's the point of buying the edge finder, which is pretty expensive? I can just watch the stream every day. What's the value of having it? Because relying on other people is not trading. That's just copying. That's like saying, oh, Nick, I could join your Discord, or James, I could join your Discord and just take the trades. What's the point? Because you're not trading. You're just copying. You know, what happens if, what happens if Nick isn't able to go live for a week, a month, or Nick retires? What are you going to do then? Well, you're stuck. It's not sustainable to always be a copier. You need to be able to forge your own path and learn what to do, and have the tools to do it for yourself. Good day, Mr. James. Hope you have a great weekend. Thank you very much, Simon. I hope you do as well. What aspects of the Edge Finder best complement VWAP? I'll be perfectly honest. As much as I love the Edge Finder, I use it on a daily basis on every trade I take. It's not. I personally don't have any use case for the Edge Finder when I'm scalping, because the Edge Finder, if you think about it, is, I suppose actually that is kind of a lie. I take the biases. So let's say I'm scalping Nasdaq. If Nasdaq is bullish on the Edge Finder, it tells me the fundamentals are bullish. Okay, maybe I'll have a bit more of a bullish leaning bias for that day or that period. But generally speaking, it's not something I can use to form a trade idea on a 1 minute time frame. It's not built for that, really. So fundamentals are great for swing trading, central banks, that type of thing. Great, fine. But scalping is a completely different style of trading. It requires a completely different skill set, and the time frames are moving on completely different things. So that's my personal 2 cents. There might be other traders that use it in different ways, but personally, I don't. Why is gold up? We just had a look at gold. Ken, gold isn't up necessarily just due to the US news we had today. There's obviously the external factors, as we've already discussed. Actually, speaking about that, let's have a quick look at oil. Yeah, so oil's down. Oil's down. Yields are coming down. The US dollar's weakening. Basically, if that's the environment, people. Sorry, I'm completely butchering this. So if oil is coming down, energy prices are likely to come down, which is in turn lowering the inflation expectations of investors. So that also is going to be a case for central banks to then continue on their initial paths they were on before we had the Middle Eastern situation. Does that make sense? So we've got all of these different things going on right now, which have all at the time been bearish for gold. Now that's coming to an end, or what seems like an end. Gold is coming back into an environment that is relatively positive. So, it's Friday. We all know how the weekends work with Trump in office. It could completely change. I did have a headline this morning come in saying that there's been strikes on Iran, and the market, I woke up and I was like, oh no, what's going on here? I need to get to the charts. Nothing changed. So, we'll see what happens over the weekend. But so far, everything seems quite stable. So Bitcoin, let's have a quick, oops, not an alert. Let's have a quick look and see what's going on here. So we're still getting a bullish reading with a positive score of 7, which is nice. Yeah, I mean, we've already looked at the left side. We've already sort of analyzed this over the past couple of weeks. So I'm not going to bother doing that again today. I'm still in favor of Bitcoin. I mean, fundamentally on the Edge Finder, it's bullish. The trend on the weekly is bullish. I don't see any reason really to sit bearish at this time. We've also got the Nasdaq, the S&P, the Dow, all these markets doing quite well. So I wouldn't be in favor of saying that this market is now going to rally down to 50,000, 45,000, so on and so on. I wouldn't mind the idea, though, of just being a smaller pullback. Again, this is a weekly time frame. So we've had 1, 2, 3, 4 weeks, a month of pretty much nothing but buying on Bitcoin. So it's reasonable to expect a little bit of a pullback, possibly just into these previous highs on the left, and then a continuation higher. That's kind of my base case, but of course we'll see. And as I always say, a bit of a disclaimer, I'm not a Bitcoin trader. I'm not a crypto guy. So do your own due diligence as always. Forecast higher than 65K. What do you mean, Ken? NFP came out at 115K. So yes, it did beat forecasts. But what you've also got to think about is priorities in the market. So fundamentals day to day, or in what you may consider normal markets, fundamentals are the drivers, yes. However, when we've got geopolitical things, they come, well, obviously depend on severity, but things like COVID, war, oil supply blockages, those types of things override fundamentals on a general basis. So it's not really a case of, oh, NFP did well, so the US dollar is going to rally on that. It's not that simple, unfortunately. I wish it was, but it's not. So people get to see the value of it. If just catching a few glances of the tool is your purpose. Yeah, that's also another great point, Israel. Actually, I didn't think about mentioning that yet, but that's the other thing. The Edge Finder has so many different tools. Like, for example, seasonality. I don't really use seasonality. I also don't really use sentiment. I don't pay that much attention to COT or retail positioning. Sometimes I do, depending on the exact situation, but it's not a part of my core approach to the markets. But some people that is, and they might use that in every trade. So you might not see all the things it has to offer. GBP USD. Let's take a look. Oh, we just had the open. Just bear with me. Let me just see. I'm still on the weekly time frame. It doesn't seem like we've had much of an opening, to be honest, or much interest anyway. Okay, so what were we looking at? Pound dollar. Here. I think being a buyer does make a little bit more sense at the moment. We do have a bullish trend. I don't think there's anything on the Edge Finder though. Yeah, no, there is no pound dollar reading, bullish or bearish. So on a fundamental side, I'm neutral. I wouldn't personally look for a trade, but I think technically looking for buys is reasonable. So I think we've missed, or potentially missed, the pullback. Yeah, I think if we were going to have a fib pullback, it would have happened here. So I'm going to write that idea off and just go with one idea here, which would be a break, retest, and continuation. So in that case, I think the approach we'd go with, the approach I'd go with is something like this, which actually looks perfect. So what we can see, and this is complete forecasting, it may not happen. So fib from the low of this, the most recent low. If we can break this level, come back up, double top here, then retest this level back into the fib, and then rally higher, I think that would be a beautiful trade. I think that would be really, really nice. But of course, that's in a perfect world. We'll see if that happens. Yeah, you'd also need to wait for the next stream. Yeah, completely right. And yeah, my YouTube channel has been dropped in the chat. I would appreciate it massively if you would drop a subscribe. Trying to get to 5,000 subscribers. So that's my current goal. So if you could help me, I'd appreciate it a lot. Gold catching a bip. Yeah, gold is catching a bit of a bip. Doing quite well actually here, isn't it? So yeah, I mean, it lines up with what I've just said. I think gold is more of a bullish bias. Actually, let's just see what the Edge Finder is saying. I wouldn't expect the Edge Finder to really have anything. I mean, it's not on the bullish or bearish. So it's actually flipped a little bit. So previously, gold was getting a slight bearish reading of -4. Now it's getting a +3. So it's starting to climb in the right direction for a bullish bias. It's not there yet. So we are on the way. So again, Edge Finder just needs to go up another 2 or 3 points to give it a full bullish reading. We need to see the trend change, and then we could look to be buyers. I think with gold, it would be very reasonable to look for these previous highs. Now, I'm not saying that's a guarantee. Obviously, nothing is. But if I was able to get into a buy, I'd be very happy just letting it run and seeing if we can get back to these levels. I think it's sensible. Just thinking beyond that, I don't think there's really much else for me to cover. Let's just see what's on the top setups that we've not spoken about. Pound Australian's getting even more of a bearish reading of -8. So we can go ahead and have a quick look at that one. I'm still very cautious about trading the Aussie just because, as I've already said, I think it's very, very crowded. And the longer it continues, the less it's going to take for it to rebound. So it's hard because I think the technicals are obviously bearish. The fundamentals are bearish. It's more just my personal bias that's getting in the way. So what do we have here? This looks quite nice. Previous support now retested as resistance. So let's just do that. And then if we just slightly break my own rules a little bit and use the 38.2. Yeah, I mean, this looks quite nice. I do really like it. So short position, something like this. I think this is reasonable. I'm not going to take it again just because it's not, I just don't feel comfortable with it. But if someone else said they took it, I would completely understand why. I think it's fine. Beyond that, what do we have? Australian dollar individually still getting a bullish reading, which is nice. Euro is also getting a bullish reading. DAX and Dow also quite nice. Nasdaq, yeah, it seems like we're overall risk on sentiment on the edge finder. Obviously, Russell, Nasdaq, Dow, DAX, Euro, Aussie, all risk on assets. So clearly a risk on theme there. As for yen pairs, I don't really want to go short. So I've been speaking about my thought process on yen pairs over the past week or so, and I think the best way, or the way I'm seeing it really, is I can use the edge finder more as a timing tool. So rather than it being a case of, Swiss yen, for example, is bearish, I'm going to go in short, I'd rather wait and use the bearish sentiment to let me, or allow me to get a little bit of a discount and then flip into being a buyer rather than being a seller. Just because I just don't like being a seller of a seller of yen pairs, because I like to get in on the overall direction and catch that carry trade dynamic and just let the trade run. So that's kind of all I've got for those markets. When it comes to crude or oil in general, I think, and I think this is a little bit of a risky thing to say right as we head into the weekend. So I'm not saying this right now. Probably wait for the weekend to pass and obviously assess and see how things are next week. But I wouldn't mind being a seller of oil, actually. I think obviously it's been heavily bought up. And then it's reasonable to look for sort of the pre-war prices to get hit again as we see continued de-escalations. Now, if we look at the way crude moves typically, we often do, actually, wait, hold on. Too big of a time frame. When we do get these spikes and rallies, we can often see it correct very quickly, quite hard. Now, obviously, this is a daily time frame, so the term quickly is relative, obviously. But yeah, I wouldn't be surprised if we do get quite a hard drop on oil over the next 2, 3, 4 weeks, maybe. Obviously, that won't be the case if we get re-escalations, but yeah, my idea, I think short oil, if things continue to be okay, is quite a nice idea. Anyway, I think that's kind of all I've got for you today. It's a little bit of a shorter stream, I think, because we have missed one guest, so I came on earlier and I don't really have that much to discuss with you beyond what I've already said. So unless there's any questions or any chart requests, I'm quite happy to call it a day here. I'll give you guys a couple of minutes and see if there is anything. If not, that's fine. So just to do a quick final review, let's just double check Aussie Swiss. It's still just not doing anything. Thoughts on Aussie New Zealand? Yeah, we can take a look at that one. As for SSLN, again, not doing really much. I do have a couple of stocks running, but nothing really of interest. So Aussie New Zealand. Yeah, I mean, we were looking at this one. I need to get rid of these drawings, but I don't really want to. It's a nice memory. So I wouldn't mind being a buyer still. I'm not as bullish as I once was when I was taking these long positions, but I wouldn't mind taking one last attempt, maybe something actually like this where it is. So we have come down towards this 200 moving average. The RSI relaxed a little bit back into a relatively oversold area, nothing too crazy. Stop loss just below this previous low, and looking really just to trade into the pullback and use that as a buying opportunity, I think is quite nice. So that would be my bias, but I'm not sure. Yeah, so the edge finder's really dropped off, or Aussie New Zealand's really dropped off the edge finder, I should say. This used to be the most bullish reading, and it's now dropped from, I think it peaked at what, 13, 14 maybe. It's now dropped down to a 5. So the drop in the reading is also a drop in my confidence. So while I still like it, I'm not that interested anymore. I think I've run my course, I got the money out of it, and I'm happy to move on and allocate elsewhere. Did I manage to get to euro pound? I didn't, unfortunately. I was considering it. I had an alert yesterday. It did get hit, but I was watching and I just didn't like it. Let me get rid of this again. Yeah, so my alert was actually pretty much around here. So if I did execute, it would have been quite a nice entry. The problem is, it's just not that great anymore. So at the time when I was first looking at euro pound, it was quite a nice bearish reading on the edge finder. It's not there anymore, and it seems like it's just a little bit indecisive. So although yes, we've now got the bearish trend, we've had some nice drops as well. I just really don't like all this choppy behavior. It just, I don't know, it makes me feel a bit uncomfortable. So I'm not really happy with this market right now. Pound CAD. Okay, we'll get through a few of these, and then we'll call it a day. Wow, pound CAD is rallying. Wow, crazy. I haven't been paying attention to this. Have I missed something? I don't think I have. Yeah, crazy stuff. I mean, we were looking at pound CAD longs. I mean, I don't think there's anything I can really say, to be honest, on this one. So I think at most what I could really look at is potentially something like this. So RSI is overbought. Obviously, we've had a rally. Naturally, the way the liquid markets, like the most traded markets work, when we have these strong impulsive moves, we often do see corrections. So I wouldn't be opposed as to saying that we could see a correction of some of these candles, pull back into the fib, retest this previous high, use that as a break and retest, and then potentially continue higher, especially if we do get de-escalations over the weekend or further de-escalations over the weekend. I like that. But yeah, there's not really much I can go off from this. I suppose, obviously, you need to pay attention to the high over here at, let's say 1.87. I think that's something you should be keeping in mind if you are being a buyer. But other than that, it seems like a relatively simple one. Euro dollar. Okay. Same thing as, oh yes. Okay. I just realized obviously US dollars weakening. So Canadian dollars likely going to weaken, as well as obviously oil weakening as well. So, yeah, I think being a buyer makes sense. So the only thing I'm really getting from this is that the euro is getting a bullish reading. The US dollar doesn't seem to really be involved on the edge finder right now. But if I was to take euro dollar, it'd be more on the back of the individual euro reading and the fact of the US dollar is down itself. So I would be looking for, let's say, one of two things. So either the break, retest, continuation higher. I think that would be pretty simple and straightforward. Or we end up topping out at this resistance level, look for a pullback into the fib, and then the continuation higher. Either of those, I think, is quite a nice idea. But yeah, at the moment, right now, I can't do anything here. It's already done the move, you know. Good NFP is good push indices higher or lower. So typically, a good NFP, like when you say good NFP print, I'm going to assume you mean it's higher than the forecasted. That would normally be a bearish event for the indices markets. Anyway, ladies and gentlemen, I am going to head off. Guys, I hope you have a fantastic weekend. Enjoy the rest of your days. Stay safe. Don't get margin called. Thank you for being here, and I'll see you all next week.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Friday. Great day by default, as always. Sorry about that mix-up earlier. I was doing another project, failed to see the changes this morning. So thanks, James, for coming on and filling in for my slot there. I'll take it from here, my friends. And, yeah, we'll finish out the show. So, as always, guys, let me know if you have any tickers that you'd like me to take a look at. I've got my chart over here on the right. I do have the A1 Live code for Ola Prime. You got your QR code as well if you guys are looking for a discount on a really good prop firm. So definitely check that out, olaprime.com, and get you an edge finder, guys. The same thing every day. Get you an edge finder. This stuff saves us a ton of time, especially for examples like this where I've been busy on something, had no time to look at my analysis. Now I've got a top setups. I've got all my info at my fingertips. So it's a really good thing to have. When you're in a pinch for time, it'll save you a ton of time as well. But anyway, yeah, still in that meta trade. Did get a tiny bit of a gap down this morning. So I think I'm still hovering just a few points below where I was at yesterday. So not really a whole lot of a change on that front there. But just going to let it go. I'll let it go through the weekend, guys. It's basically going to turn into a little bit of a longer term swing trade for me. I just feel pretty good about the way the indices are going right now. Now, obviously, this weekend, and I say that sheepishly because we all know how new geopolitical headlines can come out over the weekends. It seems like weekends are a hotbed for it. So hopefully, I don't trip over my tongue when I say that, but I think I'm going to go ahead and leave it open. I feel like I've given it quite the size of a stop loss as far as giving us some wiggle room. So I'm going to leave it set there, and we'll just go from there. Dollar CAD. So, yeah, we obviously had the positive NFP report come out, balanced out a tiny bit by the hourly earnings. But obviously, guys, NFP trumps that. No pun intended on that. Canada had some pretty dismal numbers as well, 0.2% higher on their unemployment rate from their forecast. And now they're in the negatives on their employment numbers. So not a good day if you're holding Canada dollars. And then we can see it playing out when we match that pair up. Dollar CAD is just pushing up quite nicely over here. So this pair moves about 55 pips a day, 60 pips, something like that. Let's look at our ATR, 58.5. So right in the middle. So it's already made quite the move, 45 up to 70. So it's already made a 60-point move, or 60 pip move rather, from the release of that report earlier today, or maybe slightly less since we got that number right in this area here. So yeah, still pretty neutral though overall on dollar CAD. It would have been nice if we had that on our bullish list, but we don't. And then look for a pullback. Okay, but that's the hand we're dealt with when it comes to dollar CAD and those two reports today. Taking a step back though, we did, just for some more context, overall, we had kind of bounced into that zone of demand, that daily demand that I had drawn up from March 11th. We did get our drop into there, and now we're trying to see if we want to break some structure to the upside. If we break some structure to the upside, that's going to help the case, I think, a little bit because we are currently getting a negative rating, I think it is, on the trend, if I remember right. Let's go look at dollar CAD. I know it's neutral, but let's see where we're sitting. Where are you at? You're hiding from me, dollar CAD. Oh, it's up here at the top. Okay, so the technicals have already swapped because I think this was giving us like a +2 or something this morning when I first looked. But it's really all about that sentiment, guys. So the last COT report we got did favor Canada. Okay, and this is really the only change. Today's COT report made changes because if we go take a look at the COT report, remember Canada had the biggest increase in net long percentage from the big banks and institutions, +5%. And then the dollar was actually sold off to the tune of minus 0.69%. So if we could get this picture to flip around, we might have a dollar CAD pair on our hands next week to take advantage of the NFP results, the negative Canada employment numbers and the positive US numbers, employment numbers. So I am very, very in tune with what the COT tells us after the bell today to see if we can maybe get a flip. Who knows? I mean, if we can get that, I think we'll have a bullish signal on our hands for dollar CAD, guys, because we already have the technicals. We've already got the fundamentals. We're just lacking on the relationship between the smart and the dumb money. And just for kicks, I want to see what the crowd's telling us on the retail sentiment over here for dollar CAD. Dollar CAD, where are you at? Dollar CAD, where are you at? You're hiding from, oh, it's right here in the middle. Okay, so basically 52% of retail traders are long, net long. So that's another thing that's a little bit of a hiccup. It's not anything major. I don't know about you guys, but when I look at retail sentiment, anything between like 40% and 60%, I kind of write off as just a little bit too neutral. And I start paying a little more attention when we get the higher numbers of discrepancy like this. Okay, where you got 80% and higher favoring the longs. And then that's where you'd want to look at it as a contrarian signal and possibly short if everything else lines up. So yeah, that's 52 and 48. I mean, it's a toss of a coin right here from the average retail trader at home on their laptop, their cell phone, placing orders here. So not really getting any help at all on the retail sentiment. And this thing this is a lot more dynamic than the COT report, guys. This thing changes, depending on the source, several times a day or maybe just once a day. Whereas the COT report, we have to rely on a Friday, and it's updated as of the Tuesday. Okay, so it's all automatically 3 days old when we get this numbers. Now, some would say that's too old; it's no good. But I'm kind of in the camp of Nick, like he says. Yeah, it is automatically a few days old, but at the end of the day, banks, when they're putting in their orders, they're not necessarily scalping on a 5-minute chart, right? They're getting into longer term swing trades, position trades, things for the longer haul. So those week-to-week changes are very important. That's what I'm going to be waiting on for dollar CAD going into next week. Let's hope Trump forgot his Twitter password so that market won't reverse for the 100th time in 2 months. Yes. Well, he doesn't use Twitter. He uses his Truth Social more. He only does his Twitter account like I think maybe a handful of times in the last several months. He does all his stuff over here on Truth Social, which if you guys have financial juice at all, there's actually a setting on here where you can tell it. Let's see here. I'm trying to remember exactly where it's at. Somewhere on here, you can tell the system to put all his important truth posts on here if you don't want to necessarily fool with getting an account. Okay. But again, put your politics aside. Whatever he says a lot of times will move markets. So you just got to get away from all the campaign noise and the, knocking everybody else noise. But he does. There's some hidden gems in there at times that move markets. So like Nick says all the time, it's not about politics. It's about the numbers and the hard data. Hard data, put your politics aside. There's good and bad in all of it, right? So anyway, I digress from that. Taking a look at these top setups over here. Let's see here, 8-4. Okay. Yeah, nothing really changed, guys. We still got all those Aussie pairs at the top. Still needing some discounts on the Dow and the indices and all that. I did want to go take a look. Let me see if you guys got anything. Yeah, just let me know, guys, if you have any tickers or anything to check out. I'll just kind of go down through some of my actual alerts I have set. And of course, I have I got several stock alerts in there as well, but we can skip those. Kiwi yen, this is an alert that had hit. Now, I think this one had actually fallen off the list. It did. So that's why I ignored this. But just looking at the reaction from the overhead supply zones that I was looking at, because it was a sell bias back on Tuesday, I think it was, whenever I told you guys I missed that trade by 1 minute. 1 stinking minute. Okay. Let's go down to a 1 hour. Let's see here. Yeah, it was Thursday, actually. Or what day was that? Heck, I can't even remember what day it was. New Zealand yen, Wednesday. I don't know. I lost my place, but no, it was right here. Yeah. Yeah, that's right. That's where it was at. So this was the trade that I missed on Tuesday night. That's right. Where we bounced into that overhead supply and just bottom fell out of it. Okay, I missed that trade. I was complaining, moaning to you guys. Remember that? Well, in the wake of that, it actually created a new zone. So this was an area I was keeping an eye on. And then we got the bounce yesterday. I flip over to the top setups. It's fallen off. So it's a very dynamic list. Why did that happen? Why did that happen? Why did you change on me? Kiwi. There you are. Kiwi. See if we had some changes over here. Well, there you go. It was that bullish unemployment rate that we had for the Kiwi the other day. Okay. It had flipped to bullish. So that gave us that Kiwi strength. I don't want to say Kiwi strength, but it made it just a little more stronger over the yen, which also had a bullish report. But anyway, it all has to do with comparing the current numbers on the list with the previous numbers. So it just got just a little bit more bullish. Remember, we were down at like 33% on the Kiwi, and that's why we were getting such a strong bearish bias towards it. But then you had a bullish report come in, and it skewed everything. Put it back into the what I would say the more medium range or neutral range, that 40 to 60% range. Again, guys, those are just my numbers. That's just kind of the way I look at the strength and the weakness of these currencies. Anything in 40 to 60 range, I just kind of, I don't want to say I ignore, I don't favor. I favor the extremes. Anything under 40, anything over 60. That's kind of the way I look at it. So anyway, when that happened, it obviously took it off, and then I ignored this signal right here. And, and not only that, you guys have probably heard me say this many times. Was this supply zone created on its own, or did it create as a result of bouncing off another zone? Okay. The latter part is correct. So that was another -1 for me, beyond the fact that it fell off the edge finder. And we still got a little bit of a reaction from it, as you can tell. And it actually broke this more minor structure down here. But overall, this thing's just kind of doing one of these numbers where if you kind of connect the dots on the trend, it's just kind of choking back up to the top a little bit. Bounce, 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 bounce. So, it's not an exact science, but, even if we had a short signal on that thing, well, it's not like we would get a ton. We might still get a 3-to-1 out of that, but the point is, come down and bounce may just take away all your unrealized gains. So that's just kind of something another thing I was looking at is that the lows kept getting higher. We kept forming higher lows, even though we were kind of bouncing into this overhead supply. So basically turning into a pennant or whatever you guys want to call it, triangle pattern. I don't know. I don't really get too deep into the pattern names, but I still want to be aware of it because this is going to tell me where the retail traders are looking, where the retail liquidity is at. Okay. So anyway, that was that. I can delete that because that was the only alert that I had. And I updated everything else today, first thing this morning. So we'll just take a look here. I do have about 17 minutes. Pound yen, that one has fallen off the list as well, I do believe, but that is it's technically one of the ones I was looking at the closest. And I do think, where did our pound yen go? Pound yen. I'm gonna have to have another chart up on the other screen so I don't have to flip back and forth. Where's pound yen? Hiding on me? Let's include my neutral. Sorry, guys. Sometimes these things evade me and I can't find it. Pound yen, where are you at? Did it fall? Is it on the list at all? Okay, that's weird. I have a vanishing symbol. Let's alphabetize them real quick. I'm trying to find pound yen. There it is, -6. Okay, good. So that one is still on the list. All right. Well, that makes this a lot better looking over here then. Now, the difference with pound yen, unlike Kiwi yen that we just looked at, is that we don't necessarily have the higher moving lows. Okay, this supply zone up here that I'm watching, which I believe was a 4-hour, 2-hour, sorry. So this 2-hour supply zone broke structure. It broke all this little triple bottom over here. That's one thing I like about this return to this price up here, is the fact that we broke this structure down here. Now, would have been obviously even better if we'd have broken this one, but that was one of those major. That was probably the most major of the yen intervention moves that we saw back on, was at the 30th, end of the month. Okay. So this one's obviously the second strongest. It did break these minor lows, just not the major. So I'm still keeping an eye on this as my favorite spot to possibly short. If we just come up a little bit higher, guys. Again, Kiwi overall is 42. What did we say? 42, 43%. So it's still weaker, but it's not like very, very weak yet. At the end of the day, the yen is still looking quite nice. If we go take a look at the surprise index one more time, 75%, guys. So the yen has exceeded expectations on 3 out of 4 reports. And remember, it also had that bullish report of the PMI data from the first. So right out a week ago, last Friday. So that's the most recent data we have. 6 bullish to only 2 bearish. That's pretty good numbers. So this pound yen short would be a little more about the yen strength, I think, than it would the pound weakness, because the pound had that bullish report, remember. But what I like about a short biased asset like this is having a bullish report come out for the pound, because perhaps that's going to be the driving force to push it up to my supply zone, where I can then take advantage of the unfilled orders and short it. So it's not always bad. It's not always a bad thing, I don't think, if you see a bearish asset, to have a bullish item go against it, as long as the overall numbers are still giving us a bearish number like it does on Edge Finder, which I still don't know why that wasn't showing on my thing. But anyway, get my scoring signals. Huh. Oh, pound yen. It's right in front of you guys. Might have to check the contacts that I'm not wearing right now. But anyway, that's going to remain probably my favorite bearish asset going into next week, because I don't want to go to smaller time frames and try to find an intraday short, guys, because it's going to be a little bit more on the uptrend side of things when we scale down to smaller time frames, right? So no interest at all in trying to short. Now, obviously, I don't want to go against the Edge Finder, although that is a very nice waterfall move. Some would look at this and say, oh, well, it dropped that fast, it can move up that fast. Yeah, because, in general, the supply heavily exceeded demand so fast that there was just nothing there. So in some theories, yeah, you could buy to sell, okay? It's just, you're automatically going against the bias at least one of those 2 times. So I don't like doing that. I have done it before. I've had a tiny bit of success with buying to sell or selling to buy. Buy to get to where I ultimately want to sell, but I just don't like to do it. It's going against the Edge Finder. It's going against the bias, and I'll just leave that for everybody else. You guys can do that. No, don't do that. You don't want to do that. Stick with the trends. Stick with what Edge Finder tells us. Of course, between all of us guys, we're flipping this on multiple times throughout the day, so that you can at least get a little bit of a snapshot. But definitely encourage you to get your own if you haven't. It'll save you a ton of time. So that's pound yen. Let's take a look at our Aussie pairs, Aussie Swiss and dollar and CAD. Okay, there's our Aussie dollar. So same thing's true as yesterday, guys. Still waiting on a discount down to this point. Remember, actually, no, this is new since I talked to you guys yesterday. So we had gotten that push from the supply, and now we've based and we're going back up again. I love seeing moves like this, because this creates a brand new pocket of liquidity right here. Brand new. So now if we get that push down, and these are going to be sell orders, because these buyers that push price up are putting their sell orders down here, their stop losses. So now that gives the banks a little more sell orders to add to fuel their buy orders. And then just a little bit deeper is all I'm asking, to collect the unfilled orders from the demand zone, which had a lot of green candles coming out. This is a picture perfect momentum move, guys. Break structure, because it broke that swing high right there. Several green candles. The range of these candles is bigger than the more recent ones. And it just kept going. Broke a 72 half level, which I would say is more of a minor psych number, not really a major, but it is still a psychological number nevertheless. And now let's just get these pullbacks. We've got a liquidity pocket. We got the unfilled orders. Price comes in. We might, going into next week, have a buy on our hands. So long as Aussie stays stronger, dollar continues to plummet. Now the dollar, we had the bullish numbers come out. So let's take a quick look at that, because we did have the bullish NFP, which I think trumps everything. Bullish number. But then the unemployment rate, which came out on target or forecast as forecasted. Okay, this box here should turn to neutral, if I'm looking at that right. Unemployment rate, yeah, neutral. So it just hasn't, I don't think, updated yet. Unemployment rate, yeah, bullish. So this should drop our percentage down to, I guess, to the high 30s. But even though that's going in reverse, I'd be afraid of betting against the non-farm payroll, guys. Really would. When you're doubling up your forecast, that's a good look for one of the more purplish of the red folder events, if you ask me. So just be careful about that if you're kind of looking at the relationship on the percentages and everything. I would imagine Nick would probably say something similar to that, just because of, again, yeah, you look at first glance, this number is going to drop. But I ain't trying to fight the NFP, even though the NFP has kind of been back and forth. One time it'll be bullish, the next it's bearish, the next it's bullish, the next it's bearish. So it's been kind of getting a little crazy on that front. But anyway, I digress from that. Aussie dollar, say we will do that. Aussie Swiss, yeah, and Aussie dollar I think is going to be my favorite of the Aussie pairs, by the way, going into next week. Aussie Swiss, I think it's a little more messy. Yeah, I would need a deeper discount. So nothing's really changed over here. Just basically following that green line path there. Liquidity right here that they'll be able to tap into. Okay, the banks, if they're trying to take the opposite side, scoop up that liquidity, scoop a little or drop a little deeper though, collect the unfilled orders for a push up. So that would be the Aussie Swiss look. It's a little farther away, I think, than the Aussie dollar look. And then we had the Aussie CAD as well, I do believe. Yeah, which is a little deeper. Yeah, so there you go. This thing's just been making some moves. And at this point, I can delete this supply zone from way back in, what was that? March of 2021. Yeah, we finally pierced through it. So we got a reaction from that one a couple times. And now we finally pierced through. So, and actually, I'm going to leave it there for the time being because we might have something. Let's see if we can find anything in here. Clearly, we got a daily down here and some 4-hour zones. And this is probably likely just one big congestion fest right here. Former support becoming resistance. Okay, however you want to draw that up. I'm not doing it 100% accurate, but you guys get the idea. Former resistance, I should say, becoming support. So let's see. Go down to a 4-hour. Let's see here. I mean, if we're gonna be that, if we think that the former resistance and support now becomes support is accurate, we've actually got a zone of demand clear at the bottom down here. A new one. If we get a discount down to there. Now, you guys see, I've obviously got my alert set down a little deeper. This whole thing could just be looked at as one big sideways congestion or retail value, if you will, fair market value, I should say. So perhaps we sweep all the liquidity that's under here, all these stop losses down here, and then bounce into the zone of demand. But if we wanted to be a little aggressive, we could look at this area here. At least this is at the bottom of this sideways move. So it's not like it's straight up in the middle like that one is. See, that looks nice. The problem is there's too many candles to the left. This whole area to me just looks like one big fair market value area. Okay. Just remember, sometimes you just got to scale out, scroll out and look at the big picture. We get too deep into the smaller time frames, guys. I think more people than not don't scale out and zoom out to see the big picture. We have to understand the big picture before we understand the nuances of the smaller picture. Okay. So just be aware of that. If you're trying to, on Aussie CAD, it's giving us a bullish signal. Just be aware that this could be a little bit of a liquidity trap. Okay? But the reason that I'm paying attention to it is the only reason is because we finally chewed through the rest of this supply. So that tells me we've got to have some kind of underlying strength somewhere in here to be able to push through that former supply. If it weren't for that, I'd have zero interest in this technically liquidity area here. But since we broke through, that makes me feel a little better. And then obviously you've got a new zone to worry about ahead. Okay, so that's a new daily supply from back way back when. And here's the thing: you've even technically got, and I'll keep an eye on this. You've technically got a brand new impulse leg. Swing low, swing high. This is a brand new impulse leg because we broke this structure right here. Did we not? We broke structure. So can we find a discount in this leg of price? It'd be a little more aggressive, but as long as we don't hit this supply zone overhead, I might be interested in taking a look down here. Now, the VSA candle, the volume on the very bottom candle doesn't really look the greatest on a 4-hour. What about a 1 hour? Yeah, see, I don't like it. I don't think I'm going to like it. I don't know, guys. I just don't know. Perhaps you could be ultra aggressive and look at a candle like this right here, which is kind of at the 50-50 of your fib. If you're a fib trader, from swing low to swing high, might be getting a little too granular though, guys. But I'm going to keep an eye on it. I wouldn't recommend newer traders do this, but I'm going to keep an eye on this particular zone unless we bounce into the supply. If we do this, if we do anything like this, even if we just barely touch it, this is a no-go. None of this is all a no-go. But if we come up and just flirt with it like we are now and then drop in, well, guys, Aussie CAD has given us a very bullish score on the edge finder, is it not? Aussie CAD, very bullish, plus 10. You only have seasonality going against it. Everything else is either neutral or bullish. This is what I mean when I say this is some of the rare times I'll go for higher on the curve trades, or maybe your 38.2 level on the fib, is if we have the data to back it up. In this case, I think we have the data to back it up. Now, I don't care how strong it is. If it bounces into that overhead supply, I'm ixnaying this whole thing. And it's all because of this daily supply from way back here. Again, guys, and I need to go to a daily time frame. What am I doing? This supply right here. Okay, we're talking February of 2021, which ultimately is a major top, a major swing high. The gap's not the greatest. I got to give you that. That's a horrible gap. But it's still a top, and it's still a supply zone nevertheless. So I personally just want to be aware of that. And if you're trying to buy up here, no matter what kind of trading strategy you have, just be aware of that. Again, guys, half of the reason I show all the supply and demand zones is to show you guys where these potential landmines are that could potentially take away your unrealized gains or just cause a needless loss, right? High on the curve, overhead supply, just be careful with it. We need discounts. We buy low, we sell high. It's Trading 101 is probably the first 2 or 3 sentences we learned, guys, when we decided to check out this thing called trading. It's cliche, but it's so true. We don't want to be buying in expensive prices, right? We want the employee discount when we go to buy our used car. Bitcoin, yeah, I don't think a whole lot's moved on the Bitcoin front for me personally. I think we're actually not too far away. Yeah, so remember, I do have this 2-hour zone of demand drawn up. And we've just kind of based those since I was on yesterday. Yeah, we've basically went nowhere. But again, I like that it's doing this because it's creating liquidity pockets underneath it. Accumulate some sell orders, sell stops, or I should say stop loss orders, which are sell orders to get scooped up and fuel the buy orders to the opposite side along with the unfilled orders. So that still remains my favorite spot on Bitcoin. Again, just a reminder, you do have former resistance, which is basically what it's bouncing into now as possible support. You're probably and clearly there's buyers in this area, guys, just because it's bouncing into this former resistance. So you already have liquidity on both sides of this equation. Yeah, you're going to have buy orders up here as well for the shorts. This is basically a fight. It's a fight. But you got liquidity on both sides of this. So the question is, which liquidity is going to be swept, and are we going to get a reversal from it? I don't really care which one it does. To be honest with you, look, and I'll end it on this. Even if we get a push up first, well, there's liquidity there. And there's going to be more liquidity pushes. So then we could look for the liquidity sweep to the bottom side. I'd be okay with this. I'd also be okay if it just comes straight down into it. Because either way, we still have stop loss orders right here as well. Stop loss orders here, stop loss orders here. Fair market value since about this time yesterday. Literally since this time yesterday. And, thankfully Bitcoin is a 24/7 asset. So I'll definitely be keeping an eye on this the whole weekend. I'll let you guys know on Monday if I take advantage of that at all. But yeah, I think that's the basis of what I'm looking at. Oh, and look at that. Look at that. $CAD actually did peak back on. So there you go, guys. I just went through that analysis on dollar CAD, and it's actually peaked onto the list. So now everything's looking good. I figured that was probably the case whenever the trend kind of changed to the upside a little bit. So, yeah, I mean, look, as far as possible zones on this thing, I still will feel a little more comfortable with this if we break the structure first, just like I drew up here in my green drawing. I would still personally want to see a push up and then a close and then a retrace. Because if we get a retrace, we may have a zone of demand just hanging out right here, staring at us in the face. Look at that. Look at that. With a little decent volume underneath. I like that. That's going to be my play going into Sunday evening here in the States when the market's open / Monday. Break this structure, turns this into an impulse leg, and then we buy a discount into the bottom of the impulse leg. That's my play, ladies and gents. As always, I'm not a signal service, okay? Not financial advice, just showing you what I'm looking at so that you can, just kind of help project things on your own there, supply and demand zones, landmines. Again, even if you don't trade supply and demand, it's totally fine. Just look at these zones as landmines because they are very, very effective and they can wreck any trade out there if you're not careful. So with that, ladies and gents, that's my 30 minutes. I'm going to get up out of here. Have a wonderful day. Let's see how this, be careful with intraday trading today because the NFP is still going a little crazy on some of these assets. When you start seeing the volume or the volume spread analysis kind of deteriorating and going back to the where it was before, that's typically good or better spots to kind of start latching onto whatever that trend is. So just be careful with the liquidity or the volatility and the volume, or in my case, volume spread analysis, since that's the indicator I look when getting into trades. Have a wonderful day. Peace, love, and chicken grease. We'll see you on Monday.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.